Hey, what's going on, everybody? My name is Lamont. I've been a full-time trader for 7 years now, part of the Chart Guys team for more than half of that, where I head up our futures room and our swing report. In this video, we will go over the overall market, cover some of the hype sectors, hit you with some trade zones, update on some of the stuff we discussed last week, and that's pretty much it. So let us get into it. All right, so first things first, the market didn't really do much for much of the week, pretty much just balanced sideways. We had this pop and drop kind of a day. It's a bit of a red flag, sure, but as of right now, as long as these buyers are still holding over the prior all-time high at 524.61, then they're still constructive, of course, relative to the prior all-time high, meaning higher prices relative to the prior all-time high are being accepted, which then means that there's really no big red flags right now for these buyers. The weekly time frame, it's a doji, right? And so if next week we break under 524.72, then weekly consolidation is underway, and we have a good amount of space for a higher low to be set over 493.86. Now, let's get into the weeds a little bit more, I guess, because we do want to discuss something. This was very, very similar situation to what happened over here, right? On this day, on this day, the 4th, you had a gap up open, right? And then drill lower under this local balance. And then on the move back up, the point of control of the structure started becoming problematic. So now what we're looking at is the potential of a similar situation, right? Because here you have the gap up. This was a gap up to new highs, but still a gap up that the buyers could not hold, and then a drill down under local supply. But already this is more acceptance over the point of control here, this point of control here at 529.11. This is already more acceptance than the buyers saw over the point of control back here. Like on this day, it was really the highest that they made. So while it's similar, and obviously it's not full steam ahead right now, like the sellers do have the potential to press the issue here by finding acceptance back under 529.11. As of right now, it's still okay, right? And this was a very notable failure, right? That if you'll notice, the low of this session here is 524.72, and the prior all-time high is 524.61. So they missed the testing it by 11 cents. So it's always very notable when the market doesn't do something, right? You always want to pay attention to what the market doesn't do. Very similar to how QQQ here, right? On this day, what did they do? Very similar, right? They did not they did not backtest this prior all-time high. The low of this session was 449.54, and the low of the prior all-time high is 449.34. So they missed by 20 cents. And then, of course, you see what happens, right? So this is early indication that this selling was weak, right? Now, will it continue to be weak? We don't know. But we do know what to monitor next week to assess their strength. That's this point of control, 529.11. And then, of course, the prior all-time high, 524.61. Even if the sellers can break back under 524.61, that would be a red flag, sure. But as long as you hold over this prior supply, now acting as demand, you can see how the point of control was problematic. Here, 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 and here. And the value area low is problematic here. The low of the structure, right, that's this guy over here, was problematic over here. And then once you flip the point of control into support, okay, now it's up to the races for a bit. So even if the sellers were to get priced back under 524.61, as long as they're holding over 520.31, then the buyers are playing solid defense against this prior structure. Okay, so that is pretty much it for SPY. I think it's also worth mentioning, you know what, I should have had it queued up, so I apologize for a bit of a delay. But and if you're a part of our Slack, then you've already heard me talk about it, like incessantly maybe. But I think it's very important to be able to identify these kinds of things, right? So basically, as soon as we were looking at the 20, no, the, let's see, no. Huh. Should have been this day, the 20th. Huh. Hold on. Oh, you know what? I'm searching the wrong thing. It should be potential further daily value. Okay, so on the 20th, is the first time I believe that I talked about or I guess the 21st was the first time that I spoke about the potential for further daily balance, right? Because the idea was this, right? And I really think this is important. If you are looking for a fast higher low and higher high situation here, right? A higher low here into a higher high, you know, are you early on this move, right? This move started down here. You're not early on this move. So the ideal situation, right, when you see a little rinky-dink daily higher low like this, is what happened here, a higher low and a higher high. The probability of this rinky-dink higher low leading to higher highs was much better than this one because this is still relatively early in the rally, right? They just broke out of this key demand zone. So put yourself in the shoes of operators, right? Like who is buying this daily higher low? It's not the innovators. It's not the early adopters. It's probably starting to be the laggards, but we don't know that, right? So what we can do, however, is look for a certain indication that these buyers are not really advancing so well anymore. And so that's what I'm talking about here, right? Staying focused on buys, but potential for further balance and just pop and drop on daily. So looking for some daily range to get established before making plays for it. So this is what I'm talking about, right? The potential for more further daily balance as opposed to a quick daily higher low and higher high. And so this is exactly what we got. And I believe I talk about the prior all-time highs being key here, right? ES, all about the prior all-time high, QQQ, same dealio, right? I also say, it's notable that they failed to touch down on the prior all-time high. I don't really want to, here it is. They failed to touch down on the prior all-time high, right? So it's really important, I think, to always assess the market from the perspective of change, acceptance, and then when there's a notable failure, when the market doesn't do something that it should have done, okay? Or they're trying to get it done. Not so much that it should have been done, but the sellers are trying to get back under here because their number one goal is to negate this breakout into all-time high. Additionally, the sellers actually failed in two ways because there's a gap over here, right? So this gap to fill is down at 523.83. So not only did the sellers here miss touching the prior all-time high, they also didn't fill the gap. So this is essentially two failures on their part. So as of right now, as long as this is the case and they don't get back under the prior all-time high, they cannot fill this gap. What does that tell you, right? An incomplete gap fill is always indicative of weak sellers. So will I the gap? Will I the point of control? That's pretty much it. I don't think this came into our trade zone. Just a little bit lower, and it would have come into our trade zone. Obviously, we were making trades in the room, but that's not swing trading, right? Okay, so moving on to the Qs here. The Qs are actually showing you a little bit of relative strength. So you'll notice they're not even close to backtesting the prior all-time high, 449.34. They already got that out of the way here, and the open was much stronger. I'm looking at it a bit differently. So for SPY, you have this as pretty much just one structure. For QQQ, this might still be one big old structure, but for now, I'm kind of viewing it as this 3-day balance and then this 3-day balance. And so as of right now, the buyers have defended that's not right. This is a bug. 453.57 is not the regular trading hours high. Regular trading hours low. It should be this. 454.58. That's not correct. I don't know why it's looking like that. Should look like this. Okay. So anyway, ignore that little wick. But the idea is you opened up at the value area high of this little 3-day range or just under it. You move down and miss touching the point of control. Again, a notable failure, right? And then you pretty much just balanced for most of the day, balancing within the prior day session. So just the inside bar. So the sellers did not advance essentially, right? This was a really good, what is that called? A sucker punch, right? This was a really good sucker punch from the bears, but they didn't follow it up. So if this was like, I don't know, like a surprise jab, right? They couldn't follow it up with a cross. Okay. So or like an overhand or whatever, whatever. So anyway, so that is notable, right? So next week, we're going to be watching 454.49, right? If they can't break under 454.49, that means that this area is still offering demand. If this area is still offering demand, then we're not coming back down to the prior all-time high. If we're not coming back down to the prior all-time high, then higher prices relative to the prior all-time high are being accepted, right? So it's very straightforward. That's pretty much it. So the buyers are trying to set a new daily higher low here, 451.85. Next week, they'll just have to break 460.58 to have confidence in doing so. Actually, technically, you just break 459.23, the high of today. Yesterday. That's pretty much. I think this didn't come into our trade zone either. It should be lower. So I still stand by this, right? There is definitely the potential that these sellers will press the issue next week. But as long as you're holding over these two structures, it's not that big of a deal because on the weekly time frame, you're just looking for a higher low. So really, this trade zone is honestly just looking for kind of a shallow pullback. Assuming that we continue to pull back from here, it's really just looking for like a 382 to a 50% pullback. You know, we might even be wiser to bring this all the way down to here, like down to these lows. Let me just steal one of these guys. Make a little bit of an adjustment here. Something like this, you know, makes a lot of sense for a potential weekly higher low. All right, this gives them the chance to come all the way back down here to where there was the last meaningful area of balance. Because as long as you're holding over here, you don't negate this change, right? This was the market saying, hey, we believe higher prices relative to this structure are fair. As long as we're over this prior high, it's a high, at 433.76, technically they're constructive relative to this, right? So that is pretty much it for the Qs. The Dow is showing us the most weakness. It is in the trade zone right now. Hourly is starting to get extended. I still stand by this trade zone. I think it makes a whole lot of sense. And it's pretty much the same idea as QQQ, recovering this daily no change level as well. And so if you initiated in this, then you're probably just still in it. I don't hate it. I still think it's totally reasonable play. I don't really trade the Dow, but just looking for a weekly higher low, potentially leading the market a little bit here. And that's really it. So we pretty much just flattened out here, right? Let me just get this out of the way so we can see the price action more clearly. You pretty much just flattened out here. And I think it's kind of notable that you had a daily lower low today that just didn't see any follow through. So next week, however, even if the buyers get some bounce here, if they can't get back over 395.27, that would be a red flag. That's the point of control of this structure here, which obviously was the key supply in the way of new highs. They did break the new highs, but could not hold back test of this structure as support. Therefore, now it is acting as supply. So there's a good amount of space for a daily lower high to be set under 400.72. So if you initiated with our trade zone, right? If you initiated from our trade zone and you would get that bounce by no later than 395.27, should you be looking to chop up this position, pull the orders lower. If you're just kind of blindly scaling in using these levels, pull those orders lower, throw your stop over here, and then rinse and repeat. Right, we'll run the same exact play. If you have that hourly extension, even better if you have the daily extension, RSI gets under 30 or whatever, then we can be looking for those plays in the same exact place essentially. So that is also pretty much it. Space for that daily lower high under 400.72. I think I already talked about that. And that is really it for the Dow. There's nothing else to say really. This is still a fine trade zone. It's the same exact concept as the Qs. Do I know it'll work? No. No one knows. If you're watching somebody or you're like getting guidance from somebody who like speaks in absolutes, they're lying to you, straight up. Or they're dumb. So either way, you probably don't want their counsel, probably. So anyway, that is pretty much it. Or maybe not dumb, maybe they're like ignorant or misguided, whatever. I don't mean to be judgmental. But if you're in this game, right, you cannot be thinking in absolutes. This is the game of probabilities, like poker or sports, I guess. Like there's a skill element to sports, but there's also a luck element, right? Like you can be a really talented fighter, but just get caught with a shot and they get knocked out, right? So anyway, same thing for like a favorite, a favorite and it's, in a team and it's going into a game, they can still lose. Okay, so IWM, this is very notable, right? This is still the key structure that we're looking out for. It made all these lows over here. It made this high over here, these highs over here, I should say. And as of right now, these buyers are having a really hard time holding above it. This was the most acceptance that these buyers have been able to maintain over this prior key structure over here, but they couldn't hold it. And so if you can't hold this, right, then we should expect price action like this, right? Just like what happened throughout all of here, right? This move cracks this structure, right? Moves through it. Where does it problems? Right over here off of this structure, correct? Reject, hold the lower structure, defend against the upper structure, hold the lower structure, try to hold above the upper structure, fail. What should we expect now? All right, we should expect more of the same. This is still potentially a big old daily head and shoulders, and these sellers should be trying to come back down here, 199.26, but it is notable that they held this low. This low here is the low of this local demand zone, right? So it is a good look for these sellers to have created an area of supply over here, broke down from that area of supply, and then pretty much a picture perfect point of control rejection, right? The high of the day is pretty much picture perfect, right? I actually made a mistake on this day trading the other way, a huge mistake. But if you're a member, you're hearing me talk about it. It's not really appropriate for this video. But oh, I mean, I guess now is a good time to talk about it. We're actually having a sale. I don't know what the sale is, but we are having a spring sale, and it's probably promo. I hope there's promo material. Yes. Okay. So our annual. Okay. I guess it's for our annuals, and it's down from $10.99 to $8.99. So, you know, $200 off of our annual community of 1,000 traders. I literally just got off of a call with a whole bunch of people, full-time traders. The call is still going. These people are insane. It's 1:40 right now in the morning Eastern, and they are literally still huddled up. This huddle started at 4 p.m. and these guys are still plucking away. We had one member who went to bed when it started, like sometime after it started, and then he when he woke up, it was still going, and he said, "Good morning." I literally just got off this call so I could do these videos. I was supposed to pick up my wife, but she doesn't need me anymore to get her, so I just started recording these videos instead. So yeah, that our community, that's how much we love this game. We love trading. I love trading. I love trading. I love teaching. And so if you want to learn, you know, how to get this done, how to play this game appropriately or responsibly or whatever, then give us a shot, give us a try. You know, even if you don't decide to renew, I can almost guarantee you'll leave with more perspective and probably more appreciation for trading. So anyway, consider it. If not, keep consuming our free content. If you wouldn't mind giving us a like or subscribe, that'd be very helpful. Otherwise, let's get back into it. So, okay, they held the low of this daily demand zone, and so now it becomes a matter of, you'll notice where price flattened out here, right? First of all, the low of the day was pretty much right at the point of control of this structure, right? So no acceptance under this POC, right? After holding this low, what's happening? These buyers are trying to defend against trading through this guy, and so they held the low, and now they've held the point of control. So at this, and they flattened at the value area high. So at this point now, if you do get some daily bounce going, that would essentially mean that this structure is being affirmed as demand. So next week, what we're looking out for then, the next key level is 206.34, 207.35, which is just where we broke down from. This change is not negated until these buyers can get back over 207.35. And then above that, you're looking up at 207.61, the point of control, and then 208.22, the value area high. Okay, so let's see. I think we do have our trade zone from last week. We do, and so it came into the trade zone. If you got these two fills and you went out of the day, two fills, so your average price is pretty much here, so you probably break even or whatever. And so at this point now, if you do get some bounce next week, no later than here, 207.30. So you chop that up, throw your stop under the low, and then, you know, obviously we'll take it from there. But as of right now, same thing as before, as the Dow and the Qs, whatever, we're looking for weekly higher lows. Okay, so this is potentially a play for a weekly higher low, and if this structure continues to hold for the buyers, well, then that's the weekly higher low being set, right? So that is pretty much it for the IWM, and we do have space, or sellers do have space, for a lower high to be set under 209.48. Anything under that will be good for daily lower high. Moving on to the dollar here. So the dollar is bouncing, looking for a lower high under 105.380. And like we discussed last week, as long as this guy is still resistant, well, then obviously the change from this breakdown has not yet been negated. So they're trying to set this daily lower high here at 105.050. Next week, you just got to break 104.550, and then that will be this daily lower high confirmed. Now, that being said, there is space for a higher low to be set over 103.965, and these sellers, they should be trying to make their way all the way back down here, because as of right now, all of this price action has been dictated by this structure and this structure, right? Just chopping around. No acceptance below, no acceptance above, no acceptance below, etc. So on the way down there, however, you have these areas of demand that were built on the way up. So they should just be trying to crack through these areas of demand one at a time. So if you made a play for this, then you're just sitting pretty, waiting to see how it shakes out next week. And this is still just a weekly decline. So actually not even a bounce for a weekly lower high yet. If you want to be a little bit more conservative, you could wait for the weekly bounce to get going, but this is also very reasonable. So that is pretty much it for the dollar. People are still messaging me. 1240, you guys. VIX. The VIX still hanging out near these lows. I would not be surprised with a spike in the VIX, right? This is an area where there's been many bounces. So next week, if there is more selling, that would not be surprising to us based on where the VIX is. But I should say, as long as these structures are holding price, then no big deal. Okay, but if this VIX keeps drilling lower, the odds of it spiking again will increase, right? That's just kind of how it goes, right? It makes many lows here, and then really the next area where it makes a bunch of lows is like in the mid eights. But historically there have been many bounces off of this like 11-ish level, all right, 11, 12-ish level. So be mindful of that. Move on to these hype names here. So NVDA, if you'll recall, we gave you that big setup over here in the public. Nope. That was a private one. This one. We gave you this public setup a few weeks ago, right? And then for subscribers, you got this setup too. And so if you did either of those, then you're sitting very pretty, right? Like you're doing quite well for yourself here. 25% up, from the public trade zone, if not more. It's more, 30% up from that public trade zone. So at this point now, if you're still managing this trade, you can just keep walking your stop up. Your stop can be here now for both. Even if you did our private one, same deal. Your stop can be under here, 918.06, or even like maybe here where the volume picks back up to give these buyers a chance to kind of hold where all this volume picks back up. If you want to be a little bit more conservative, right, protect your gains, then 936-ish under this high volume area is a very reasonable place to be hiding your stop. Okay, so that's it. Lots of space for a daily higher low to be set. Anything over 931.80 is going to be good for one. And for now, these buyers are totally fine, right? Like the change of this breakout will not be negated until they can get back under 974, right? So we'll just label this. Okay, so for a trade zone from here, just looking at it like this, pretty much, right? Something like this. I know it's more risk than these setups, but you just gotta take what the market gives you, right? And it's actually pretty similar risk. Something like this makes a lot of sense. Let's check out like the pivot points. So wow, over R3 now. So let's just play for R3 for the. I mean, there's not much left to the month, so hold on. Let's just do that. Let's not be too ambitious with it. That should be where they're trying to get to, though. Oops. Okay, so that's pretty much it. Pretty reasonable trade zone, right? Here's where all the volume picks up, and if it trades through this big old block of volume, probably a red flag, and we're probably going to look for more balance in here, Okay, for Bitcoins now. So Bitcoin, we gave you that setup on this day. So on May 11th, on that weekend video, gave you that setup, let you know, hey, I initiated here. Threw my stop under there. At this point, I just walked my stop up to here. So it's, I need it to go now. Otherwise, this is probably not a monthly bull flag that's going to confirm from here. And I don't really want to give back gains. I'd like to just walk away with some profit. So if you did that trade with me, then just walk your stop up to here. I think that's very reasonable. This is still just looking for a daily higher low over 65852.02. I believe I have a 4-hour range drawn up. This is a local 4-hour demand zone, and you can see what is happening here, right? They break the point of control, but they fail to get to the value area low. Break the point of control, fail to get to the value area low again. Like if you zoom in, you'll probably get even more detail right around it, right? You cannot tell me that this is not this price reacting off of. I mean, you can, but I would ignore you. but you can, like, this is clearly the price. To me, this is clearly price responding to that local demand. So as long as this 4-hour demand is supportive, then this trend is fine on the 4-hour time frame. That being said, you're currently rejecting from this local supply, and we're having problems, lo and behold, surprise surprise, at the prior all-time high. It is obviously not a surprise. It was problematic here, right? Problematic here. It tries to hold, they try to defend it, they try to hold over it here and here. It becomes problematic again over here. Try to hold over it over here. Problematic over here. Try to hold over it over here. And then this rejection over here is really what was the start of all this, right? And so I do think that it's worthwhile to bring back our developing. Let's see where to go. I just draw a new one. Oh wait, I think it's this one. Yes. Okay, so check out what's happening, right? Remember before we were talking about when you're balancing, right? You should test the value area. You should test both sides of the value area. So here was the value area high being tested. Here was the value area low being tested. Value area high test, value area low test, high, low. Deepak rejections were red flags, right? The developing point of control rejecting price here and then here again. That was a red flag. Them advancing under the value area low was the sellers pressing the issue. No acceptance under it. Hold the developing value area, right, low, and then trade through the Deepak. And now look what's happening, right? Not only are they holding it for this 4-hour demand, another way of looking at it is the Deepak is starting to hold price, the opposite of this, right? So now it's the buyers trying to have their go at finding acceptance over the developing value area high, this guy over here, just like the two Deepak rejections over here were the seller's opportunity to find acceptance under the deval like they did here and over here, right? And so that's what we're looking out for now. If these buyers now can find acceptance over the diva, which is right now at 70191, again, it's almost 2 a.m. Eastern on a Saturday morning, okay, then they're doing really well. They're being constructive. They're advancing. Okay, so that's pretty much it. All right, for Bitcoin. Could just keep balancing, you know, but we'll see. Ethereum, so recall I gave you this trade zone so long ago. This was in March, I guess. I usually drop it right when we offer that idea. So this was probably thinking, okay, we broke out of here. And so if we pull back, as long as we hold over this guy, right, which is what made this low over here, defended over here, right? And then it becomes problematic for these buyers throughout all of this, As long as that guy is supportive, where should they be trying to get to? If you come out of this structure, like over here, right, where do they try to get to? They try to come up here, correct? Hold this structure, try to come up here, correct? And so that's why the targeting was based on that, right? And so it spent like a month in this trade zone. Plenty of time to accumulate a position over a month. And then we got the ETF news, which is, you know, what sent these prices beyond the target. So if you use this trade zone, you should have already chopped it up because it's already past the target, and that's a 30% move. So ideally, you've taken profits on your position already, and now you can just run your stop under here, really, right? Like no later than under 2814.12. Okay, so daily higher low is trying to be set here at 3521.24, and it's really just a battle right now for these two structures, these two guys over here, this guy and this guy. You can zoom in and see clearly this fella, right, was problematic over here, right? And then this guy, the lower structure, right, was problematic, or rather supportive over here and here and here, and now problematic over here. And so right now, this is the 10.5 to 13 structure. They're trying to hold it now, right? Not only are they holding over this guy, but they're also trying to hold over this guy. This move squeezed all the sellers in here, and now is squeezing all these sellers in here as long as they are finding acceptance over this high. 3726.79, and you'll notice the body of these candles is over this high, right? So right now the sellers are having a hard time getting price back under this high, which is affirming this structure as demand. If this structure is going to be affirmed as demand, what should we be looking out for next? Looking out for this guy, right? Because this guy is exactly where we had problems last time here. Okay, after that guy, right, after this fella, what do we have left? Just this guy left. Okay, so Ethereum flirting with breaking to all-time highs, which could be the beginning of an alt season, right? That could be it. So we'll just check the BTC chart, and this is the biggest move that we've seen in the ETH BTC chart since January. And if we check out the dominance chart, we'll get some indication too. The dominance chart is also looking for a potential lower high now. So will it come? You know, we don't know, but we're getting more and more indication of that potential increasing. Remember, game of probabilities, you know? So that's pretty much it for ETH. Moving on to CCJ here. So for CCJ, there's really no change. I still think this is the very reasonable trade zone because we have not yet broken into a new all-time high without, you know, adjusting for dividends. We've not broken to a new all-time high here. So $56 even remains the key, and this structure sitting at all-time high is also key. If we look at our recent price action, you'll see that this structure sitting at all-time high, problematic, 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 value area high, picture perfect rejection damn near, 1, 2, 3 times there, point of control supported, point of control resistant, point of control resistant, you get it. And so this is notable. There's space for, rather, they've already set a daily higher low here at 51.18. So the buyers are actually super constructive here, right? As long as they don't come back under 50.22, that means that that prior that balance sitting at all-time high is being affirmed as demand, right? So the goal then for these sellers is to get back under 50.22. If they can't do that, well then obviously these buyers are very comfortable. I still stand by this trade zone because this could still be an expanding range. And so if this is going to be an expanding range and this is going to be a higher high to next follow through, they should try to test the lows. The odds of that are kind of less likely here because this is a pretty strong trend so far. Like it's not, the sellers had an opportunity to come back down to these lows here and they didn't. Doesn't mean they won't do it in the future, but that's a pretty notable failure. So as long as 50.22 is supportive, these buyers are totally fine, even if you get a daily lower high and lower low here, because there is the potential of this just being a daily lower high, 53.90, if next week they break 51.72. Okay, and if they break a 51.18 from there, then it's daily lower high and lower low, confirmed daily downtrend, but it's coming right back into an area of demand. So we have to stay frosty for the potential of this demand zone supporting price, even though we saw a daily lower high and lower low. Okay. That is really it. And bigger picture, I'm looking at 44.47 because as long as 44.47 holds, then we should just be expecting balance like this, right? Just more price action like this that we've already seen. All right. Yeah, I'd say I still stand by this. I think this is a very reasonable trade zone. Essentially, it's probably looking for a weekly higher low as well. It is looking for a weekly higher low. So similar play, or even a lower low that likes follow through. Okay, so that's it for CCJ. And then we got TAN. So TAN, we gave you this trade zone back here. It worked. It was back here, I think, or this one. It was back here, I think. So it's worked 3 times now. It's come into the trade zone, gotten to the target. It's still a very reasonable trade zone. Even if you reject here from these highs, it's still a very reasonable trade zone because it's designed around this big guy over here, right? As long as we're holding over this big guy over here, then we should expect to try to come back to this guy, right? But what is in the way is this guy which made the lows of over here and tries to support price or does support price, albeit temporarily over here, flips into resistance over here, right? Failure to test the point of control is notable, sends us back down here. So we should just expect more of this kind of price action as long as there's no acceptance over this guy and no acceptance under that guy, right? So really no change from last week for the most part. And if you have any runners now, you can just throw your stop under here at, let's see, at nope, should use this one, for 1.89, right? So your stop can be hiding under this local area of demand. At this point now, if you've not taken profits, you know, you're probably just being kind of greedy, right? Because not only are you above the value area high of that structure, that key structure, but you're also testing these local areas of resistance. And it's probably this guy that's been problematic here. It's not probably, it is this guy that was being problematic for the buyers throughout all this bounce. Okay, so pretty picture perfect POC rejection, value area low rejection. So now it's all about 48.13. If these buyers can find acceptance over 48.13 from here, that would be a very notable shift relative to all of this price action. Okay, so this, you can see why I prefer trading horizontal levels, right? Like I don't have to deal with, is this the trend line or is this the trend line, right? Or do I draw it from the closes, like the bodies? You know, that changes things dramatically. But when you just trade with horizontal levels, there's no arguing, right? That's just the price level. So that's pretty much it for TAN. Lots of space for a daily higher low. Anything over 41.92 is going to be good for 1. That's it. And now you have space for a weekly higher low as well. This is a notable move. So we shall see. And then finally for MSOs. So MSOs, if you use this trade zone, it worked for us once, it worked for us twice. Third time, not so much, right? Well, third time it did still give us quite a nice bounce, but now we are under this zone. Bit of a red flag. Up until now, the low of this structure was key because this was the lower low that lacked follow through. This lower low here lacking follow through made it so that if the buyers wanted to remain constructive after defending against this lower low that saw follow through, they would have to hold the lows of this structure, which is what they do here. And now they have failed to do so. So, you know, personally, I'm not interested in MSOs anymore as long as they cannot find acceptance over this guy. Because acceptance over this guy means we should expect price action like this. And so far, they've had a really hard time finding acceptance over this guy. There's clearly a battle for it. All of this price action oscillating around it is a battle for it, right? You can see how many times the value area high gets hits, the POC gets hits, the POC gets hits, etc. So that's really it. You know, if you're an MJ trader, unfortunately, you got to call for what it is. This is not really a constructive chart anymore. Okay. That being said, if you say, you know what, Lamont, I don't care. I'm a believer, you know, MJ all day. You know, you're a pansy. I bet you're a Reggie Miller fan or whatever, right? Then I would say, okay, fine. If you insist, I'll hit you with a trade zone, right? At this point now, you probably want to be looking for something like this, right? There's a bunch of volume traded down here. This range is too large, honestly. I don't love it. I don't love it. It would have to be like, I guess, something like this, right? Holding over this guy means you're not coming into here, and it was obviously reactive over here. So if you insist, I guess it would be like this, but I personally would not do this trade. Something like this, if you insist, diehard MJ fans. I know you're out there, you know, because Dan the Man is the master. I would just look at it like this. But I do not like it. I would like this trade. I would be very interested in this again if they can find acceptance back over this guy. 9.37 being the key level. So that is it. Appreciate you guys tuning in. Thank you for sharing some of your time and energy with me. Again, if you could hit us with a like or subscribe, that would help us out a lot, please. Just a sacrifice to the algo gods. And if you are interested in joining a community or signing up for the Spring Report, where we will hit you with 2 novel trade ideas every single week, update you as those ideas progress, and give you live play-by-plays. If we take any of those trades, which is pretty regular, I'm almost always in at least one SR trade. Right now it's AEO, a sell. I mean, I have some runners too, but right now it's AEO is a sell that we hit over here on this pass back under the point of control. And so right now it's a 5% game. You know, it's not much, but it's honest work. So anyway, that's pretty much it. Again, appreciate your time, appreciate your energy, and I hope to see you next week. Farewell.